Hi there YouTube and welcome back to another video. On today's video I'm gonna show you guys a simple Fibonacci strategy that you guys can apply on the volatility 75 index or any other volatile or index pair that you wish to trade, guys. So let's jump straight into this video. So the Fibonacci is like a most common tool, guys, that I most likely love to use and that you can use as well and take advantage from. If you're really gonna take notes now from this video, I can guarantee that you will become even more profitable with this type of strategy. So what I'm gonna give you first now is the basically understanding of the Fibonacci. The Fibonacci is basically what it says. It basically determines how far the price can retrace back. That is why it's called the Fibonacci retracement. This retracement tool will help us and determine us to build a stronger strategy behind our trading plan. It will also give us the insight of how far can price potentially retrace back. So this tool can become really valuable for you as a trader. So that's why I'm always having the Fibonacci in my toolbox as a trader. So that's why I'm deciding to give this value for you guys so that you guys can use it as well, because why a lot of new traders who's coming into the market always ask me why you using that lines on your chart. It's not the lines, guys, it's a Fibonacci. So let's jump straight into this video. So this is basically my Fibonacci settings, right? Pause this video and please take a screenshot of my Fibonacci settings, right? I hope you guys get the settings. So you guys can see, this is my Fibonacci. If you draw it to the upside, right, the 100 is going to be the point where you draw it from, right? This is where you're gonna draw your Fibonacci from, right? The 100 to that zero. I'm going to show you now, right? If you see your 100, that is where you draw it from. If you see your zero, that is where you was stopping your Fibonacci. The 50 zone, okay, the 30 zone, 38-point zone, is a potential retracement that I most likely will love to see if price starting to retrace back now. Right? This is going to be my first area to see potential retracements. My 50% and my 60% reason is going to be like my golden zone reason. In this area, I would love to see price starting to behave in that particular direction and show me some form of corrections and rejections from this area before it will continue to the upside. And my 7860, this area, this would be my last area, right? If price fail to close above this reason, guys, I will most likely not get into a trading position, right? Because where there's higher probability now that price continue all the way to the downside. But if price reject this area, something like this, let me just show you. If price reject this area like this, and then we have a second candle open up with a strong momentum push to the upside, right? This is when the price is basically continue to the upside. Then I will most likely take a trading position, right, from this 7860. This is going to be my last and final uh area that I will look out for where price can easily reject from. Then if we move to the upside, guys, right, the 0 point right here, so you guys can see the 0 point is going to be my first profit target region, right? I will first target this region. The 27 point right here is going to be my take profit 2, right? In the last one must be my 618. Why doesn't I not see my 618 here? Let me just see here. 618, 618. Oh, sorry. My 618 is going to be my take profit 3, right? This is going to be my take profit 3, right? This region. This is giving my last take profit. So if I'm take it straight from this region, so let's say take there, your stop must be just under this region. I'm not gonna keep it under my 100. I'm gonna keep it under this region right here, because I know if price started to trade under my the 7860 point, I most likely will get out of the market. Right here, this is going to be my first target area, just right there, right? The zero. Move on. TP2 and TP3, just right just like that. Right there you can see you have your three TPs. So here I have examples of the basic market flow: higher low and higher highs, lower highs and lower lows. So in a uptrend, right, in an uptrend, you draw your Fibonacci from the first swing low that the price was creating. So as you guys can see, this is my first swing low, right, swing higher low. Draw it from this swing to our new higher high point. Right there, you guys can see price come back into my 50%. That I did told you this is most likely where I would love to see price reject from, and there you guys can see price continue to the upside. The same as if you're gonna draw it in a downwards market, right? If price continue to the downside, break previous structure lower lows, then we're gonna wait for price to retrace back. Draw your Fibonacci from a lower high point, drag it to the downside. There you guys can see to this lower low. Wait for retracement 50, 618 or 38. 7, 860, that's gonna be our last. Take a trade, the price come. TP1, TP2, and TP3. And then you can do the drag and back. Draw it down, drag it out to the new lower low, wait for price to retrace back to 50%, almost starts 60, and then price continue to the downside. So now let's look at live examples into the market, how you can apply it into the market. Wonder why is the markets like this. Scale down to 1 hour time frame. Sorry for that, guys. Now I'm just gonna show you guys an example. I'm not planning to make this video so long. Just gonna, because right guys, this is going to be a simple video, right? Let's start from this reason. We can basically now see is that price basically starting to continue to the upside, right? You can only apply your Fibonacci once you're seeing clean market structure, right? Continue to the upside or either to the downside. Now we can see price is basically now continue to the upside. We did basically break this previous structure higher high. This is our higher low. We drag it out to this region right here. We can see we have a 38% rejection right there, right? We can see we have a depletion right here of indecision. We have momentum. You enter your trade, keep a stop just under here, right? A first target right there, second target right there, and your third target just up here. That's how simple it is, guys, right? Your three targets was hit. So continue to the upside. Here we can see it again. Just remove that. Here we can see it again. Price still continue to the upside. We did break above this previous higher high. We have a new high. We can see it price basically now starting to retrace slowly. So we draw our Fibonacci from this point to this high point right there. This high point. We can see we have a 50% rejection right here. You guys can see that we have 50% rejection. There we can see we have momentum. If you watch my previous video on the 50-minute strategy, guys, you will be amazed, right? Right, like this. Our first target right there, second target right there, and our third target right there, right? So now we can do what we call the drag and bag, right? We got our first entry. Now we drag it up to our new higher low point and also to our new higher high point just up here, because right we did break out of this structure to put in this new high point right there. So you guys can see price retrace back, respect my 50% there again, and now we can see we have momentum to the upside. I will take my trading position, keep my stop under this box region right here, and my first target, second target, my third target. You see how accurate is this Fibonacci? It's basically stop where my third target is at and price starting to reverse. So now let's read it from this momentum right here. So here we can see price basically now pushing to the downside, right? This is impulsive move to the downside. So now we draw a Fibonacci from this move right here to this region right here. So here you guys can see that our 7860 was respected right there. We got momentum, we take our trade. If we got momentum, we take our trade. Even though the price will reverse on us, it will happen, right? It will happen, right? We didn't even get a one-to-one on this trade. Price spike us out on this trade. It will happen, guys. I'm not gonna show you guys you're not gonna get stopped, but you will get stopped out. It's just part of this game. They'll get stopped out, right? So now I'm just looking for more down market condition so I can show you guys how price is basically doing when it's continue to the downside. Right here we can see now price is basically now continue strongly to the downside, right? This is the swing that causes the break right there to this low point right here. We can see our 50% was respected. We can see we have rejections from that zone. That is most likely what we'll have to see. We must see rejections from that zone. Once you see rejection and momentum, bam, put your place your trade, place it above this box, and target your TP1 always first, TP2, and your TP3, right? That is how you're gonna use this Fibonacci. So let's look for another example. So example right here, we can see impulsive move to the downside. This is like a smaller retracement there, and we have this new lower low point right there. So you draw it from here to here, right? We can see we have rejections right here in this zone. On a smaller time frames, you can get an early entry once we break this lows. Keep a stop just above there, and TP1 was hit, TP2 was hit, TP3 was almost hit. Price reverse and stop you out, right? Look for more examples. This is gonna be the last example. So you guys can see right here, right? We're starting to create lower highs and lower lows. That is the first thing that we must determine which in which ways the market structure and behavior. Then we will use a Fibonacci. We can see prices basically now pushing strongly to the downside with momentum. We apply a Fibonacci from this lower high point to this lower low point. We can see we have a 50% rejection just right here in this area, and now we enter our trade once we see momentum. Place our stop just above this box range. Target our first take profit right here at 0, second take profit, and my third take profit. I hope you guys get value from this video. If you're new to my YouTube channel, please don't forget to give your boy that subscribe and like, and comment down below on any video suggestions of type of videos that you guys want to see. Great of luck. Rich gang.